Tesla's Cybertruck update, Lucid's production woes, Nikola's 60% surge, and more. Biggest EV stories of the week.
However, in Q1, their earnings were down both quarter over quarter and year over year. That's not a growth company. For the fifth straight quarter in a row, they've produced more cars than they've sold, i.e. they have a demand problem.
So we are zeroing in here on some of the biggest names in a trade it or fade it earnings edition, starting with, of course, Tesla, surging 128% this year so far, Guy. Trade it or fade it?
All that and more, so let's get to it. First things first, let's check in on Tesla stock. Currently sitting at $281.75 in the after hours, leading up to the week where Tesla is due to announce its Q2 earnings on Wednesday. Going back 52 weeks, the stock is up over 17%, and year to date, up a whopping 160%. Analysts continue to struggle with the valuation, while those in the know that Tesla has much more room to run. At the moment, I have no options that will expire anytime soon. Closest expiration date I have is September 15th, but at the opening bell, I'll be looking to purchase a call that expires in the middle of November. Can Tesla hit that $1 trillion market cap before September? Boy, I sure hope so. Tesla's Cybertruck update, Lucid's production woes, Nikola's 60% surge, and more. Biggest EV stories of the week. Most electric vehicle stocks closed the week ending on July 14th more firmly, although company-specific developments weighed on some stocks in the space. Market leader Tesla advanced this week amid expectations concerning second quarter earnings that are due Wednesday. Well, I'm sure hoping that auto gross margin number is high as You'll see Tesla stock hit 300 almost immediately. Here are the key events that happened in the EV space during the week. Tesla Cybertruck, factory updates, and more. Tesla's official Twitter handle shared a photo of the first Cybertruck that rolled off the production line of Giga, Texas, which was surrounded by the factory's workers. This has almost cemented the timing of the vehicle's launch, with deliveries of the electric pickup truck likely beginning in the late third quarter. Even as the Elon Musk-led company has yet to hit the 50,000 unit per year production goal for its Giga Berlin, the company is reportedly in discussion to begin work on the second phase of the project. A report said the company's application for the approval of the planned expansion was made publicly available online. The proposed second phase will augment Giga Berlin's capacity by 500,000 units to take the total annual capacity to 1 million Model Y vehicles. Tesla's Giga Shanghai achieved the milestone of producing its 1 millionth Model Y crossover utility vehicle at the plant, earning the distinction of being the fastest to the milestone. Giga Shanghai is the EV maker's export hub, and Model 3 and Model Y vehicles produced in China are exported to 9 markets in 4 continents. Expect those numbers to increase. Reports of Tesla's talks with Indian officials over potential EV factory that can manufacture 500,000 units a year made rounds this week. The Indian government, meanwhile, is reportedly adamant about not waiving duty on imported Tesla vehicles, even as the company plans to set up shop in the country. If you're gonna be a you gotta stay hard, right? Lucid surprises to downside. Even as Tesla and Rivian reported better than expected second quarter deliveries, Lucid fell short on quarterly deliveries. More importantly, the luxury EV maker's quarterly production declined from the previous quarter, raising doubts about its ability to ramp up to scale. Alarm bells should be ringing. Rivian stock took off in late June thanks to its charging partnership with Tesla and its second quarter deliveries that were above par. The stock, which nearly doubled between June 26th and July 7th, took another leg up early in the week, completing a 9-session record winning streak, then went about a consolidation as it paused for a breather. Rivian's upside may have to do with options market activity. Some 831,000 Rivian option contracts traded Monday, doubling the average daily volume, and much of the options trading consisted of investors buying super short-dated calls. Congratulations to those of you that took that opportunity. Nikola goes vertical on supply deal. Electric and hydrogen truck maker Nikola announced on Thursday an agreement to sell 50 hydrogen fuel cell energy trucks to BayoTech and purchase low-carbon hydrogen from the firm. This triggered a strong 2-session run-up in the stock. Canoo's giant leap of faith. Lifestyle electric vehicle company Canoo was in the news this week as it delivered 3 Artemis crew transportation vehicles to NASA. We're honored to contribute to space exploration alongside Gemini, Apollo, and Mercury, it said. That about does it for your news last week today. But I got a couple of clips that I think is noteworthy, especially going into earnings. Rivian is any indicator, Tesla will probably have increased volatility due to short-term call options, and there'll probably be some short sellers in the mix as well.
Kathy Wood's a big thinker. Let's take it to our next guest. So joining me now is Wedbush Securities Managing Director Dan Ives, covers all things tech, a longtime bull on Tesla. Also GLJ Research founder and CEO Gordon Johnson, longtime bear on Tesla. Two very familiar faces for CNBC here. Thank you both for joining last call. Let's start with the bull case, because the bull case has been right, Dan, so far. And you've been behind this kind of thing for a good while now. The Tesla valuation, it doesn't worry you at these levels?
I mean, not at all, because I think what Kathy is talking about is our thesis that the sum of the parts in the Tesla story is just starting to be discovered. I think Supercharger was really where the light bulb went off in terms of Ford and GM now really, going to Tesla, where this is sort of what I view as a game, set, match situation. And next is going to be batteries and then AI, which is why I believe this is a company that's still in the early innings of finding its potential. I think next week's another trophy case quarter in terms of for Musk and Tesla. And in my opinion, the bears will continue going into hibernation mode as Musk and Tesla flex their muscles with the next phases right now of the growth story playing out.
Easy enough for Dan Ives to go that route. Supercharger phenomenon definitely gave Tesla a major boost. When Tesla dropped their delivery numbers, you could hear the guy from Mortal Kombat yell, "Finish him," to the bears, because Tesla is firing on all cylinders. Let that gross automotive margin number be above 19.5%. You're going to see fireworks.
And let me just say this, all right? And this is with all due respect, because you're a very smart man. You do your research, you do your homework. There are valuation models out there that totally agree with what you're saying with regard to Tesla and why it should not be trading where it is. But the market has been disagreeing with you. What is it going to take for the market to realize that you are correct in saying that Tesla is overvalued at this point?
Right. So, Dom, thanks for having me. I'll just remind you that in January and February of 2000, internet companies in both of those months doubled. And then they fell anywhere from 90% to 100%. So the market can get disassociated with reality. With respect to what Dan said, I feel like he's speaking in vagaries and platitudes. Let me explain. So with Tesla in 2Q, right, you have a company that, according to car gurus, over the past year has cut their prices 35% for their cars. Their prices have been cut 35%, whereas Ford's prices are down 1%. GM's prices are actually up 1%. And the average car on car gurus is down 4%.
Ooh, it's gonna be one of those days, huh? This argument is only valid if you find the gross automotive margin number absolutely necessary for your valuation. Now, don't get me wrong, I calculated too. But in my bear case, I have Tesla hitting 15% margin. And you wanna know what my valuation still came out at? $364 per share in my bear case. This argument goes out of the window if we see a gross automotive margin anywhere close to 19% or higher.
Volumes. However, in Q1, their earnings were down both quarter over quarter and year over year. That's not a growth company. For the fifth straight quarter in a row, they've produced more cars than they've sold.
Produced more cars than they've sold? I find it odd that the next quarter, Tesla outpaces Wall Street expectations by that excess production number from their deliveries the previous quarter. It seems to happen like clockwork.
I.e., they have a demand problem. And you're talking about a company now, gross margins dropped from roughly 27% in Q2 of last year to roughly 16% in Q2 of this year. It's a car company. What car companies do is they cut prices to move metal. Tesla's doing it by the most. And remember, Warren Buffett reminded us, in 1905, if you looked at the car industry, right, there were 2,000 auto companies. Nearly every single one went bankrupt. So to choose Tesla as the leader when they're really the BlackBerry of EVs, I think is a mistake.
BlackBerry of EVs? You gotta be Gordon. And talking about automobile companies that went bankrupt, there were only two that did. One of them starts with a T and ends in Esla.
Right, so because I'm watching, I can see, I have the benefit of seeing both of you guys in front of me right now. Dan, you've been shaking your head pretty much the entire time Gordon's been talking. Why? He does make some interesting points here. Tesla is cutting prices, and they are producing more cars and not selling as many as they are producing. What's wrong with the argument there?
Don't worry, Dan, I got you with this one. Tesla's ultimate goal, as stated in their master plan, is to reduce the cost to produce the vehicles and pass on those savings to consumers. And to your second question, Tesla is breaking records quarter over quarter in deliveries and production. Every time Tesla produces a vehicle, they just can't send it through the Matter transporter. It takes time to get there. It's just amazing to me that they'll produce a set amount and deliver a set amount, and miraculously, it is the difference between the production and the deliveries numbers the previous quarter. It's not rocket science, people.
No, Gordon makes great points in terms of course, the price cuts, and that's well understood. I mean, my whole point is look at deliveries this quarter. This is a company right now that's going to be on a trajectory toward 2 million deliveries for the year. Trough out over the next 1-2 quarters. Battery costs are continuing to come down, and I believe it continues to be Tesla's world. Everyone else is paying rent. The margin story, the cash flow story. And look, me and Gordon are always going to disagree here, but I think the market's telling you right now that this is an inflecting growth story because of the sum of the parts. And that's why I believe supercharger, I know that Gordon disagrees. I think batteries next and AI. I think that's why eventually we're going to be looking at $1.5 trillion to $2 trillion company over the next 2 to 3 years.
What are the margins on the supercharger? Do you know what the margins are? They don't make any money on that. Why are you saying that's something to be excited about? You know that they make no money on that. So why are you on TV saying that that's a positive when you know it's a negative? They were forced to open up their superchargers to get the tax credits as a result of the Biden said you can't get the 7.5 unless you open up your superchargers. That's a negative, not a positive.
But Gordon, to that point, when you go out, the reason GM, the reason Ford, the reason everyone's going to Tesla, they built it, everyone's calling. And now ultimately they will be able to monetize that when you look down to 25, 26, 27.
But they get a free supercharging network without, if you buy a Tesla car, you're going to have to wait in line behind a bunch of GM, Ford, every other automaker. This is not a positive, it's a negative. So I don't know why you're pushing this as a positive. One other thing, Dan, this is a company valued at more than the next 10 largest automakers combined, who is seeing earnings drop in Q1. They're already having to significantly slash prices, and they're not even selling what they're currently producing. And he's talking about building more factories. I mean, you have to know, this makes absolutely no sense. And I know the stock price is high, and I know you're excited about that, but stock price doesn't necessarily equal reality, and their margins are collapsing. Their sales are going to suffer because of these price cuts. And already in 2Q, they've cut prices in China, Australia, and Japan, soon to come US. So they're still having to cut prices when their competitors aren't cutting prices like they are. So
the word salad is amazing, right? And from the little things that you can pick out, do they make money on their superchargers? No, they really haven't looked into trying to gouge customers, their own customers, when it comes to the supercharger network. Tesla will be really creative when it comes to who gets to charge and when. Gordon acts like Tesla opened up the entire supercharger network to all of these automakers. No, they get what Tesla gives them. I already debunked why they produce more cars than they deliver, because they have to transport them, and then they outpace delivery numbers for the next quarter that Wall Street expects. They have the ability to reduce prices because they're reducing the cost to produce the vehicles. The materials in the batteries are no longer at record levels when inflation was at its worst. We're entering a deflationary period. The cost to produce goods is going to impact margins in a positive way.
They're cutting prices. That means demand is less than supply. Why is this something you're so excited about? I just don't get it.
All right, Dan, we could go on forever. I mean, this is a huge debate. I'm going to give the last word to you, Dan, because in my internal clock, I want you to respond to the litany of things that Gordon has just put out there. So the last word goes to you here, Dan, on why Gordon is wrong about the Tesla valuation.
As well as the bears, because and the reason they have been is because they view this as an auto company, and I view it as a disruptive technology company that ultimately, year by year, continues to further monetize from EVs to batteries, and I think eventually to AI. And I think Wednesday night, I think we sit here and ultimately the bulls win again, and I think this debate will continue to go on. Gordon raises great points, but ultimately, I believe the bears are wrong.
Now, if I was with my scorecard, I would say Gordon Johnson definitely outbattled Dan Ives. Probably felt like he didn't need to justify himself to a guy that's not going to change his mind in any way, shape, or form. Their margins are collapsing. Collapsing to what? Still industry-leading margins? That's your argument? There is no demand? Tesla delivered a record 466 100,000 vehicles? That's how you look at that stat? That their production is in excess of their deliveries, so therefore demand is collapsing? When next quarter they're going to have another record quarter in deliveries? I don't know. I think Dan Ives could have shoved those arguments right back up. Dan Ives could have shoved those arguments right back down the throat of Gordon Johnson, except Gordon didn't even give him a chance to respond, really. Gordon's not looking for a debate. What he is looking for is to throw a whirlwind of words at you and out-emote you. If I'm being quite honest, the only one that should be allowed to battle Gordon Johnson is Ross Gerber.
About components, and more than 50 S&P 500 companies report quarterly numbers next week, and it's not just the banks. The results we're also going to get results from big tech and pharma companies as well. So we are zeroing in here on some of the biggest names in a trade it or fade it earnings edition, starting with, of course, Tesla, surging 128% this year so far. Guy, trade it or fade it?
Yeah, Steve's going to be the other side of this, and he's been spot on, so it's going to be difficult to beat him on this one. But I'll say into earnings, the fact that this 280 level represents effectively a 50% retracement of that all-time high we saw in the fall of 21 and the recent low we saw in January of this year, I think it's a place to sort of pause into earnings. I would fade it, Sarah.
Steve, you've got to take the other side, right?
Yeah, well, I don't have to, but Tesla would definitely trade this
After
one.
that setup he gave you so much credit.
Yeah, no, that's okay. So, I'm grateful for it. Guy always points out when people have done well with their calls. This one, though, is really extended because I started buying this at 105, traded at 190, then got back into it. So this one has been all over the map, and I could totally understand why Guy wants to fade it at this point because it's had such a big run. But the world is entering into their charging standard. So I think they're going to be able to monetize that going forward. You might see a stutter step on this one. Ultimately, I think it goes to 300.
Well, yeah, by when? This year?
Well, my crystal ball was a little foggy today, but I would say somehow, some way before the end of the year.
All right.
What do you think? Tesla hits 300 before the year's out? Let me know in the comments below. That's all I got for you today. Be easy. Peace.